The dollar is back above 104 US cents, having dropped to 103 overnight, but it was steady or a bit lower against all the others. The Australian currency seems to have ended its affair with the Dow Jones as representative of the general mood towards risk assets. The correlation between them has been very close, for longer even than shown in this chart, really since the crisis in 2008. But this month the Dow has pushed higher while the Aussie dollar has faded away. The All Ordinaries hasn't kept pace with the Dow either, rising 0.75% this month, while the US index has gone up 1.5%. And today was a similar story. The Dow Jones rose while the All Ords closed steady, with falls by the banks offsetting rises by the resources stocks. Qantas shares fell 1.7% after it said fuel surcharges would increase by between $10 and $30 per ticket, and Ausstar United shares jumped 2.1% after shareholders voted in favour of the takeover by Foxtel. The Dow Jones did go up, but the S&P 500 in New York eased back slightly, and there were bigger falls in London and Europe last night. In Asia today, the Indian market had a solid rise, while Japanese stocks fell. New home sales were weak in February, reinforcing the message from Stockland this week that things are tough. Home building growth is the weakest in 11 years. And that's reflected in new figures for credit as well, only 0.4% growth in February. Weak credit growth is the new normal for banks, actually. They'd gotten used to compound annual growth rate in the loan books of nearly 15% for decades, and that fueled consumption and housing booms. Now they're fighting over 3.5% growth, and banks, home builders and retailers are all struggling a bit. I'll be back on Sunday at 10 o'clock with Inside Business. Till then, that's finance.